Well, on that note, of course, above that 25,000 mark, mid caps as well, moving in tandem with the benchmarks, the bank Nifty showing traction, pharma index doing well, and all the other indices as well participating in today's up move. But on that note, let me bring on board our next guest for today. Joining me, Siddarth Bhamre, Institutional Research Head, Asit Mehta, Investment Intermediates. Sid, always a pleasure chatting, and more so today, 25,000 back on the charts, a good triple-digit move on the index. It's a rainy day here in Mumbai, raining gains on the Lal Street. It's a good start to the week. How are you feeling about the market? Last time, I would like to mention, last time when we spoke, we were sub 24,000 and today we are back above that 25,000 mark. We had a lot of issues to contend with. We had escalation with Pakistan. We had FIIs turning net sellers, what have you, and Trump tantrums as well. But now we have climbed all those walls of worry. So how are you feeling about the market?
Good morning, Nandita. Always pleasure to be on your show and welcome back to the markets. 25,000, we have seen a good bounce back from lower levels. But then I think this bounce back has been mainly news driven. The news which took us down in form of, tariff war or, in between we fell for 2 days because of what was happening, what was termed as war between India and Pakistan. But then we fell around 2%. We gained much more than what we fell. And also there was ease of, or there was a pause which was seen from President Trump of 90 days on tariffs, which led to this entire bounce back. It's good that, markets have climbed all these walls of worry, as you have stated. But my question over here is that if we were already in midst of slowdown before this tariff war started, before, these war-like situations emerged. I think these two situations have not done any good to economy at large. And that is getting reflected in earnings as well. We have seen that the expectations for Q4 FY25, Nandita, was very low. And despite that, some of the stocks have, or some of the sectors have not done pretty good. Some of the sectors or some of the stocks have done well on the bottom line front because of enhancement in margin or probably one-time income or decline in tax rates, effective tax rates. But the top line growth overall has been quite muted. And I believe from here on, it would be very stock-specific, sector-specific moves which we have to keep eye on. Don't expect market to continue to rally, which it had done, in last 1 month or so.
Okay, but in terms of earnings, then you spoke about how expectations were already low, and on the top line front, we continue to see sluggishness. But anything that really stood out, now we are at the fag end of the earnings season. Anything that I think we spoke about banks, we spoke about IT. But aside of these pockets, anything that really stood out for you this earnings season, which has the potential to have a good FY26? If yes, which were those pockets?
No sector per se as such, but within sectors we have seen different stocks giving different way. So banking also, if we start, Nandita, HDFC Bank, ICICI Bank did well, but we cannot say same for Kotak or IndusInd Bank. Results were not up to the marks. Even in life insurance space, which we track closely, we saw HDFC Life, Pro Life doing well, but SBI Life didn't do well. In paint space, we had Asian Paints and Kansai disappointing, but numbers of Indigo were much better than what we expected. So I think it is not a particular sector, but within sector, we are seeing stocks, some companies doing well, some companies not doing so well. And even those who are doing well have been doing well on back of cost controls or margin enhancement. Case in point, in FMCG space, we have seen some of the companies doing well because of raw material cost pressure reducing, which led to higher profitability. But if you look at top line growth, that has been quite meager. So if somebody has to see the actual growth in terms of volumes and look at the kind of valuation these companies are trading in, it's very difficult to make a valuation perspective buy. But the liquidity is strong, markets are doing great, and there is re-ratings which is happening on back of liquidity than earnings. So I believe this market will have probably a limited upside from current levels. But at the same time, the way liquidity is coming in, the way growth is happening, and the way you don't have much of other options to invest in, you won't see significant downside also. So my best case scenario for this market is, Nandita, that it is going to be great time for fund managers, because what happens that when market rises, it is very difficult to outperform market. But when market is in a range, and when you have to pick and choose stuff which is going to do well within sector, that is where fund managers would shine. So this is going to be a great period of 2-3 quarters at least, where money managers can do well compared to market.
Okay, but I think key takeaways, upside is limited, but even the downside is limited. But let's talk about the foreign inflows as well, right? It has turned choppy. They did make a comeback, but again last week they turned into net sellers. Then again we saw some bit of buying coming in on Friday. Of course, a lot has to do with how the US yields are also behaving. After the Moody's downgrade, of course, yields also went up. That could have led to some outflows as well. But for the long term, what's the outlook? Because India is among the fastest growing economies. It has already become the fourth largest economy, as it has overtaken Japan. It is expected to overtake Germany soon as well. So structural story remains in place. But for the short term, how do you see the flows picture panning out?
Well, clearly, Nandita, long term it's no brainer that you have to be invested in India, and people like you, me, and all other experts, we just try to make sense of what's going to happen in near term in India. Long term, the story is bullish. So if I have to read FI's, what they have been doing from medium term perspective, I think it's very important, as you mentioned one parameter, which is bond yields, 10-year bond yields, which is going higher, which makes risk adjusted return more attractive to being in US debt rather than being in emerging market equities. The other factor which we need to consider is what's happening to currency, dollar index. So last time we saw, a few months back, dollar index hit low of 99, and then market rebound from there. Dollar index also came back to 101, and we are sub 99 again. So that also suggests that we may not see immediate inflow of liquidity from FIs. And if dollar index continues to remain below 99 and probably move towards 97, 96, which is the case which we are expecting, we might see FIs again restraining themselves investing in emerging markets immediately. So I'm not expecting from a near term strong FIs flow.
Okay, but the good thing is that the domestic investors have been buyers, and they are providing that much needed support to the Indian market. But another key factor that one needs to discuss is the monsoon factor. It has arrived earlier than usual, earliest arrival in 16 years, so to say. With this in mind, do you think it's the right time to pivot towards rural focused themes? If yes, which stocks or sectors from the rural pocket stand out to you right now?
To be honest, Nandita, this rural theme, market is playing this theme since last 2-3 quarters, because everybody was talking about that how the consumption in rural economy is doing well, and in fact there is problem with urban consumption. Even if you look at credit offtake, we are seeing that happening more in rural compared to urban. Overall, I think this theme has played out. Will it continue to play more? As you mentioned that, and we are witnessing that monsoons have arrived early, too easy to, say from a larger perspective, from bird eye perspective, but we will have to, get into details of stocks, that which stocks have run up, which stocks are, valued at right price. You guys were talking about defense sometime back. Everybody is bullish on defense now because there's war-like situation everywhere. But we also have to see what is the capacity, how much, companies can execute. There are companies with almost 22-24,000 crores of order book, but their top lines are for around 4,000, 5,000 crores. So you can't just see the order book and start getting excited. You also have to see execution capabilities. So I think overall, whether it's rural theme, whether it's some other theme, we need to of course macro factors, big factors like monsoon do give fillip. But if you don't get down into stock-specific understanding, you might end up making a wrong choice. Wrong choice in terms of buying at higher valuation.
Any ideas in terms of sectors when it comes to sectors or stocks for that matter? If somebody wants to look at a particular pocket for long-term wealth creation at this juncture, anything that comes to your mind?
A few names which we recently came up with, in banking space, obviously everyone likes SDFC and ICICI. But from mid-cap space, we are witnessing IDFC first getting its act together. And we have seen that a lot of ratios have normalized over here. We are seeing that the credit offtake, the growth is, around 22-23%, which is not to be seen in many other banks. Valuations are also pretty attractive. So look, watch out for IDFC first. We have a buy call over there with around 20-22% upside target, 1 year target. We were talking about FMCG space. We have one mid cap or small cap stock called BKG, where my analyst is quite optimistic. As I mentioned, that some of the places where raw material prices have been on the downside, that has led to margin enhancement. So we have done some re-rating over there, and we have decent upside targets over there. One sector which I want to highlight over here is cement space. Nandita, there's a lot of capacity expansion which everyone has been talking about since last 1-2 years, and now some of that capacity has started coming into play. And cement companies, we have seen margins also, realizations also improving. Some of the names which we are liking in cement space is Dalmia Bharat. My analyst recently came out with a initiating coverage over there. So there also we are quite optimistic. We are adopting very stock-specific approach, Nandita, in this market rather than a sector, because within sector, there are stocks which are doing great. There are stocks which are not doing so great. So that is what we would advise to your viewers also. Don't get excited because of some macro parameter. You have to deep dive into details of stocks.
All right, do your research thoroughly. That's the advice from Sid. But of course, those 2-3 stocks that Sid mentioned, that's the view from their brokerage. But with that said, we are running out of time. We'd like to thank you for taking out time and sharing your thoughts with us. Always a pleasure, and look forward to more interactions in the future. You have a great week, and it's a good weather in Mumbai today. Of course, have some hot tea or pakoras and have a good time. And hope to, in fact, we will be looking forward to more of that since the monsoons have started early here in India. I would like to thank you then, Sid, on that note. Appreciate more interactions in the future as well.
Always pleasure to be on your show. Thanks, Nandita.
Well, then, on that note, we've come